Hello, welcome to the Wealthy Trades Weekly Options Selects. This is Tyson Clayton. It is May 11th, 2015. We've got 5 top picks for you today. I'm going to go into those and hopefully make it make sense. Okay, so I'm going to start with Priceline. Okay, so I'm clicked on a weekly basis, and the first place when I find these, the first place I go to is I go to the dashboard and I click on the weekly basis. And so, because what I want to know is I want to know where the market's moving. If the market's moving up, okay, then I want to take, for the most part, I want to take a bullish bias, which means I want to buy calls or I want to do bullish positions, such as maybe call debit spreads or bull put spreads, different things like that, or like I'm going to be doing a lot today, just simply buying straight calls. Okay, so that's what I'm going to be doing this week. I'm going to be buying straight calls, but then what I do is I want to first start with the top 8 stocks and all the sectors that are moving up. So all these sectors, other than the XLE, are moving up. So I've got a good chunk of stocks that I can look at on a weekly basis that I know hit their expected upside, all right, because we're moving up on a very high rate. So I've kind of done that already, and I'm going to go into that. So I'm going to start with Priceline, and I'm going to start with that, and I'm going to give you an example of Priceline, right? So here's what we know. Priceline closed at 1204.76 last Friday. And this is the weekly stat. So this is where Priceline should move this week. It closed at 1204.76. It's in an uptrend, okay? The expected high this week is 1234.79, okay? So 1234.79 is the expected high, and historically it hits that 50% of the time. So it's got a, and when I'm buying calls, I could do a straddle on this, but I'm actually not going to do that. But when I'm buying the calls, when I'm looking at my options plays, I'm typically only looking at a directional play. Sometimes I'll do a non-directional trade, such as a butterfly or a straddle, different things like that. But for this week, I'm going to do just straight calls. Okay, these are a lot like my earnings plays, meaning whatever I put into the trade, I'm willing to risk. I'm going to go over this hopefully in detail in this video so you can kind of get a better understanding. But what I know is it closed at 1204.76, and it's got an expected high this week on a weekly basis of 1234.79. It hits that 50% of the time. Now, when it hits that, and I can use this information as kind of a gauge, when it hits that level, that 1234.79, it typically loses money. So knowing that is actually a good thing, because I'm going to do a couple different things with Priceline. First of all, I'm going to buy the call, and I'll go into that in a minute. And then if and when it hits the expected upside, and if it happens fairly quick, I'm going to then maybe do what's called a bear call spread up there, or sell a call to generate that premium. But it's a little more advanced. I might actually add a video. If we do hit that target fairly early in the week, I'll add a video explaining what I'm going to be doing. But I'm going to try to keep it fairly simple for today with these 5 plays. We're just going to be talking about straight calls. Okay, so here's what we got. I got Priceline. All right, I'm going to go over this. Here's Priceline right here. Okay, so let me make this bold. Got Priceline. It's moving in an uptrend, and it closed. These are the numbers that I've pulled. These numbers right from the dashboard. Right. So I got Priceline. It's moving in an uptrend. They closed Friday at 1204.79. The trend level, all right, because it's in an uptrend, so the expected upside is 1234.79. Okay, so 1234.79. And it closed at 1204.79. The at the money option, so the closest to the option that's closest to current price, closest to the closing price on Friday, which is 1204.79, is that 1205 call option. I'm looking at calls because I'm looking to take a bullish bias, right? So the 1205 call is the at the money call. All right, it's the closest to the actual price call. And when I buy a call, okay, this is going to be in my options course, all right? That's the reason why you got to sign up for that. You got to be one of the top or the first 1,000 so you can get that options course. But I go into details of what a call and put are and how to actually trade these in your long-term portfolios, how to trade them for income, different things like that. But when I buy the 1205 call, if I'm looking at Priceline, that's the at-the-money call, that gives me the right, all right, the right to buy Priceline at 1205. Now, I don't have the obligation, all right? So I can buy it at 1205, but I don't have to buy it at 1205. So instead of having to put up, let's say I buy 1,000 shares or 100 shares of Priceline. Well, to buy 100 shares, I'd have to put up $12,000, right? Well, using options, I can put up a fraction of that by buying the right to that. So here's the thing. When you buy the right, when I buy this 1205 call, I'm buying the right to own Priceline, there's going to be what's called a premium in that. The person who owns that, right? So I'm selling this, or the person who owns, somebody has to own that call that I'm buying. So whoever owns that call is selling me the right to that call, meaning they have to own the shares, and they're saying, okay, well, I'll sell you my right to buy Priceline at 1205, but I'm not going to just do that for free. I'm gonna charge you something for that, right? So the cost of that 1205 right now is, I think, because the price line is actually going to open down slightly. The futures are down a little bit, so the price line is going to open down a little bit. I think I'm going to be able to get it for about 12 bucks. So what I'm going to do is I'm going to look to put in an order at the 1205 calls in Priceline. I'm going to try to get them for $12. Now, why does this trade make sense? Well, let's go back over to the Wealthy Trades dashboard and think about this. So again, the at the money call is 1205. The expected high is 1234, right? 1234.79. Well, and it hits that 1234.79 50% of the time. Well, if I buy the 1205 calls, okay, if I buy the right to own Priceline at 1205, and Priceline rallies up to 1234.79, right? Well, now what are my 1205 calls worth? Well, I've got the right to buy it at 1205, right? And now Priceline's at 1234.79. So therefore, my calls have what's called real value, real intrinsic value. They have a real value of $29.79. And I got that by taking the expected high, 1234.79, because that's where I expect it to hit, minus my call, which is 1205. So if we do hit that 1234.79, which I think we're going to, then my calls are going to be worth $29.79. It hits that 50% of the time. So let's think about this, all right? I really want you guys to grasp this. This is one of the most powerful ways to trade options. I'm showing it to you right now. So let's kind of think about this, all right? And I got a little calculator down here. So this is kind of just a crude, easy, simple calculator. But Priceline hits the trend side, so we expect it to go up to 1234.79, and it goes up there historically 50% of the time. That means that it doesn't go up there the other 50%, right? You can't get over 100%. So 50% of the time it's going to hit this. The other 50% of the time it's not going to hit that. So if it hits that, okay, then we said my call is going to be worth $29.79. That's not my profit though, right? I got to deduct what the cost of that call, and I think I can get the call for $12. So if my call, I buy the 1205 call, it rallies up, hits 1234.79. So that means my call is now worth $29.79. Well, how much did I pay for it? Well, I think I can pick it up for about 12 bucks. So if I bought it for $12, my profit is now $17.79. Right? So $17.79 is my profit. And for some reason I got this over wrong. So let me just make sure my math's right. So again, I think it's going to rally to 1234.79, and I'm buying the 1205 call, which means if it does rally to that level, which happens 50% of the time, my call is going to be worth $29.79. That's all intrinsic real value. If I buy it for 12 bucks, that means I made $17.79. Well, and I think I'm going to make that 50% of the time. Well, think about this. If 50% of the time, this is over 100 trades, I think 50% of the time, right? So 50 times out of 100, I'm going to make $17.79. It's going to rally up. It's going to hit 1234.79. The call is going to be worth $29.79, which means I made $17.79 profit. That's going to happen 50 times. The other 50 times, and again, this is kind of unrealistic, but I'm going to go into this in the options course, so you'll understand why this is unrealistic. But the other 50% of the time, guess what I'm going to assume? I'm going to assume that I'm going to lose the entire $12. Why is that unrealistic? Well, because we are in an uptrend, and let's say that Priceline doesn't rally to 1234.79. It doesn't rally there, and it closes the week at 12.15, right? So, well, the call is still worth 10. If it closes the week at 12.15, the call is worth 10 bucks. I bought it for 12 bucks. So I'm only down $2. But I'm not assuming that. I'm assuming a worst case scenario, which means that every time that I don't hit this target, which is 50% of the time, I lose the entire trade, which again is unrealistic. But look at this. So over 100 trades on one contract, I expect to make 50 times, I expect to make a profit of $17.79, which is $35,580. The other 50% of the time, I expect to lose, and that 50% of the time might be this week. So I got to be willing to lose that entire $12, maybe this week. That other 50% of the time, I'm going to lose the $12, which is kind of unrealistic, but that's only $24,000 in losses. So therefore, this is a trade that automatically gives me an edge, and this is the type of trade that I want to take every time. I'm expecting to make $17.79 if I hit my target. My target in Priceline is $12.34.79. How did I get that target? Well, that's the expected upside. How do I know it hits it 50% of the time? Because Wealthy Trades tells me it does. That's the historical hit rate. So if that's the case, my call is going to make $17.79. I'm going to buy it for $12. That means I'm risking $12. That's all I can lose. So I think I'm going to make $17.79 50% of the time. I'm going to lose $12 50% of the time. It's a phenomenal trade. All my trades this week are exactly like this, okay? Intel, I'm going to recap this in a minute after I go through these kind of fast. Intel closed at $32.80. The at-the-money call is the $33 call. It's got an expected upside, all right? It's in an uptrend. It's got an expected upside this week of $33.63. How did I get that? Again, Wealthy Trades, type in Intel. I look at Intel on a weekly basis, closed at $32.80. Expected high is $33.63. It hits that 51.9% of the time. Once I know that information, how high should it go, and how often it hits, as an options trader, I'm armed with everything that I need to figure out if there's a trade or not. Okay, so very powerful. So should go up to $33.63, the $33 at the money call. And it hits that 51.9% of the time. So let's go down here and type this in again. 51 point. I think I'm going to be able to pick this up because again, it's going to be down slightly at the open. I think I'm going to be able to get this for 17 cents. Well, think about this. If it does rally up to $33.63, and I bought the $33 call, that means so I had the right to buy it for $33. Now rallies up to $33.63. My call's worth 63 cents. Well, I think I could pick it up. I think I'm going to actually buy it. I'm going to put a limit order in to buy it for 17 cents, which means my profit potential is 46 cents. Okay, so my profit is 46 cents. How much can I lose? Well, if I buy it for 17 cents, the most I can lose is 17 cents. So get this. Over 100 trades, I'm going to win 51 to 52 times, right? Because 51% of the time it hits that. I'm going to lose the other 48. I'm going to lose the entire 17 cents. Look at this. Over 100 trades, I make $954 a contract on the profits. I only lose $327. This is a phenomenal trade. So let's just go into the 5. Here's just bottom line. Here's the trades. But that's how I use this information. I figure out what is the closing price, what's the expected high, what's the at the money call. So the at the money on this one is 33, and what's the probabilities of it hitting this 33.63. If I know that, then I know how much the call should be worth. So for example, how much should this call be worth, this $33 call be worth? Well, the expected high is $33.63, right? I'm going to buy the $33 call. That means the call, when it hits my target of $33.63, it's going to be worth 63 cents. Well, what should that $33 call be worth? Well, if it hits it 51.9% of the time, then the call should be worth 51.9% of that 63 cents. So it should be trading at 32 cents right now. I'm going to pick it up. I'm going to try to pick it up for 17 cents. Major discount. These are all majorly discounted calls, okay? So here's what I'm going to do. I'm going to buy Priceline. I already talked about this one. Buy, here's the trades. Buy the 1205. This is all this week's, all right? So all the May 15th expiration. So I'm going to buy the 1205 call in Priceline. For $12, I'm going to put a limit order at $12. My target's going to be $29.79. If you risk $1,000 per trade, then you do one contract. Intel, I'm going to buy the $33 call. I'm going to put a limit order in to try to buy it at 17 cents. My target's going to be 63 cents. I can buy 59 contracts if I risk $1,000. Celgene, I'm going to buy the 113. This week's 113 call. That's the at the money. I'm going to try to buy it for $1.70. My target is going to be $3.92. Again, I'm willing to risk this entire $1.70 because if my target's $3.92 and I buy it for $1.70, that means I'm risking $1.70, right? Because that's the most I can lose to make $2.22. So, and I can do 6 contracts there. MA, what I can do is I'm going to buy that 93.50 call. I'm going to buy that for 75 cents. My target's going to be $1.84. So again, risk to reward makes sense. And then Duke Energy, I'm going to buy the 77.50 for 30 cents. And my target's going to be $1. Those are my trades. They're all based on how high something should move and the probability of it moving in that level. And then me pricing out, is the call overvalued, undervalued, where's it at? If it's overvalued and I really think it's going to hit that level, then I can do what's called a spread. I can do a bull put spread. Or I could sell some premium. For example, like in Priceline, like I said, in Priceline, if we rally up, all right, and we hit this 1234.79, I'm probably not just going to sell out. I'm probably going to sell out of my long 1205 call, but I'm probably going to sell some premium at that level because historically it loses money when it hits that. So I'm going to probably sell that premium when it gets up there. Again, I'll post a video on that. If it does get up there, I'll post a video and show you how I'm managing that. But that's all going to be detailed in the options course for the first 1,000 members. Those are the trades this week: Priceline, Intel, Celgene, MA Duke, buying the at the money calls for this week for a discounted price. Here's what I'm buying for. All right. And here's my targets. I'm willing to risk this entire thing. So Priceline, I'm willing to risk the $12. All these I'm willing to risk what I put into it. Okay. So let me know if you have any questions. Email me at info@wealthytrades.com. Look forward to helping you guys out, and let's make it a great week.